All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And today we're going to talk about like great reopening trade, looking at Vegas a little bit, looking at a couple casino stocks, seeing which one of them might pose a better value at this point in time using enterprise value. With that,
If you like this kind of entertaining stock market content, we're just two stupid guys kind of figuring out as we go along here. So give us a like and subscribe.
all right, we'll get to it.
Two stupid guys trade stocks.
All right, so we're actually not the only ones kind of thinking this way. This is actually an article from CNBC yesterday talking about beating down casino stocks. In particular, this guy actually calls out Las Vegas Sands. The easy play is Las Vegas Sands. I'm not really sure who he is. Tatro, Quint Tatro, president of Jewel Financial. But so I wanted to look at both the Las Vegas Sands because they're the one that kind of sparked my interest a little bit, and also I took a look at WYNN. Also, we're going to touch on the fact that Las Vegas Sands sold their Venetian property during the pandemic last year. And what sort of impact that might have on their business.
It looks like Penn was also on there. Penn National Gaming. They're killing the last 3 days. Now it's too late to buy them, but they're killing it.
Yeah, I think there's still opportunity with Las Vegas Sands. This is a great reopening trade here. Enterprise value, for those of you who are not familiar with this equation, basically it's a way of valuing the whole business. If you think about it from like a home standpoint, right, Dylan? Your home is worth like the market value of the home, regardless of whether or not you have a mortgage on it or not. So this is the way you break it down. So you have the equity, which is the piece of the home that you own, the debt, which would be the mortgage, say, and then cash, if your home was able to hold cash, some sort of value there. So WYNN, this is actually, I think, a 2-year chart. No, this is a 1-year chart of WYNN, down quite a bit here, but we've started to see it kind of come back up. This is from a couple of days ago. It kind of flattened out back out, but it had a nice pop, right?
Yeah, the whole sector kind of did a little bit.
It did. In large part, it was news-driven. The Chinese kind of eased restrictions on those traveling to Macau, which is the Las Vegas of Asia, major gambling hub.
It's called Macau?
Macau. Yes,
Dude, okay, I've never heard of it. They gamble a lot, I'm assuming.
Yeah, exactly. You're going to see in a minute here that actually Las Vegas Sands, contrary to kind of their name, divested their properties within Las Vegas and are now entirely Macau. So maybe Macau Sands. I don't know. Is there sand in Macau?
There's no Las Vegas. Okay, that's weird.
Anyways, but one of the things you get with kind of a little bit of a bonus plus something with WYNN is WYNN is definitely moving aggressively into like kind of mobile gaming through the various subsets. They actually have a SPAC merger going with their WYNN interactive kind of business component. So WYNN International is going to keep, I think, a 58% ownership stake of WYNN Interactive, as it goes through the SPAC process. But the the kind of this online gambling unit is being spun off, so it won't be directly theirs.
Oh, I wonder why they're doing that. I don't like that. I like it to be all under them.
Yeah, exactly. I mean, they probably saw an ability to get like a $640 million cash infusion into the business, so that's why they took that. And new investor money. So I went through and I calculated WYNN enterprise value pre-COVID-19 pandemic. They were trading for $141.47 a share at 107 million shares outstanding, $12.33 billion of total liabilities, and they had $2.352 billion in cash in their checking account. Given them an enterprise, I'm sorry?
That's pretty good.
Yeah, I mean,
a lot of cash.
You don't have $2.352 billion in your checking account?
It's like a little bit less.
A little bit, yeah. I hear you. But $25 billion enterprise value. Okay. So where are they now as of like this week? So we're looking at a $99.44 per share, 115 million shares outstanding because they did have to issue some shares to survive the pandemic because obviously their businesses were not running to the degree they'd like to see them. They also took on a little bit of debt, $13.377 billion now in debt, and they have $2.8 billion in cash sitting in their checking account. So they actually have a little bit more cash, but I have to raise it. So given an enterprise valuation of about $22 billion, which kind of gives them about a 14% upside from their current valuation to be fairly valued to what they were selling for pre-pandemic.
All right. 14% doesn't make me super excited.
Yeah, I mean, the interesting thing, like I said, you're getting with WYNN is that you're also getting exposure to this kind of emerging kind of online gambling format. And unlike Dylan's favorite stock, Fubo TV, the WYNN product is available. I want to say they have contracts agreements already with 15 states, so they're actually rolling out a little bit more aggressively.
It's actually Fubo's strategy to only have 3. It's a plus.
Start small.
Don't think too hard about it. Just fine.
Yeah, exactly. So Las Vegas Sands, another one of these companies being down, as we kind of joked about earlier. They're no longer in Vegas. They've divested their Vegas assets, but pretty severely beaten down here. And then a nice little pop, kind of coming up towards the end here with some decent volume. This is largely how they were able to survive the pandemic, is that they actually divested of their Las Vegas property, the Venetian. This is, you ever heard of Sheldon Adelson? He's like the founder of Las Vegas Sands. Yeah, former CEO. He passed away last year as well. But they sold the property for $6.25 billion to Vici Properties. It's a
I wonder what
real
it
estate
was
investment
worth.
trust.
What's that? Do you know how long they had it, or like what it was worth?
I don't know. I think this is the original one. They were adding so one of their properties in Macau is called the Venetian. Like they kept adding properties in Macau. Then now that Sheldon Adelson is no longer alive, they kind of have completely divested their Las Vegas properties. But does it really matter? This is a breakdown of their revenue by year, looking at where the revenue came from in terms of their different properties. So you can see this Venetian Macau is in large part the kind of major property there. And then Marina Bay Sands and Singapore. This dark purple band that you're seeing up here, this is the Las Vegas Venetian. So as you can see, not the biggest kind of impact,
No, not at all.
No. Yeah.
So it's basically Singapore and Macau.
Yep. Yeah, exactly. Very, very much focused on Asian properties. So Las Vegas Sands enterprise value pre-COVID, $69.72 a share. There are 764 million shares outstanding, $16.692 billion in total liabilities, and they had $4.242 billion in cash in their checking account there. So pretty sizable, right?
Not bad.
Yeah, $65 billion. So larger company, more than double the size of WYNN. And now we're looking at it. What is it worth now? I know, right? Interesting.
So they didn't really increase their liabilities that much. I mean, they did a little bit, but not like a lot. Yeah, they didn't like change their shares.
Yeah, no, they did not issue any more shares. They did take on a little bit more debt, another 500 million or so. But largely they were able to survive the pandemic because they had over $4 billion in cash sitting in their checking account pre-pandemic. And they were able to sell that property for that $6.25 billion. So they're able to survive in an alternative way. So now you're looking at, like I said, $42.72 a share, 764 million shares outstanding. Once again, they did not dilute shareholders at all, which is something I love to see.
Yeah, that's pretty huge.
Yeah, that's awesome. Completely contrary to Carnival Cruise Line, but that's a separate story. $17.432 billion in total liabilities, and then $2.073 billion still sitting in cash in the checking account, giving them an enterprise valuation at this point of $47.999 billion. Right? If you were to assume that they would get back their previous enterprise valuations of $65.72 billion, you're looking at a share price of about $65.92 per share, which represents almost a 37% upside from the current share price.
That gets me happier. That's more sexy than the 14.
Yeah,
because even if it's half that, which is realistic, it's still 18. That's fantastic.
I totally agree. I think I'm looking at it right now. My Stim account, I think, is where I'm going to play this Las Vegas Sands. So I was looking at the January. I think it was I can't remember the strike price, but the call option, and then I was going to start selling a couple of out of the money call options against it, doing like a little poor man's covered call. I think Las Vegas Sand and potentially American Airlines, a couple of these other travel reopening stocks should have a nice upward trajectory, I think, throughout the fall is my inclination. So that I think I'm going to give that a try.
So the first thing that's going to be said in the comments, Vinny, what about this Delta variant? Couldn't we be heading down for another lockdown? Won't this take another leg down?
Yeah, it's possible. I mean, I am personally not in tune with this current spread of COVID in certainly in mainland China. I will tell you that in northeastern United States, that we've actually started to see our Delta variant kind of wave is basically hit its peak. Also, like if you saw the comments, I think it was early this week from Dr. Scott Gottlieb, the former CDC director, talking about how Louisiana's already down 10% in daily case volume from their peak. Alabama or Arkansas, I can't remember, was one of the other southern states, was about 0.5% from their peak. So they're basically flatline portion of the curve. We also saw that all the data from India, where there was a very minimal vaccination rate prior to the Delta variant moving in there, and the Delta variant seems to kind of have a natural subsidence at about a 70% immunity rate, which when you look in the United States, at least in local pockets, especially like Northeast United States, we're seeing 70% or so in terms of not quite, but getting close to that in terms of vaccination rates, at least one shot. So I'm not terribly worried about the Delta variant causing mass lockdowns akin to what we saw in the initial surges of the pandemic.
All right. Okay.
It's my thought.
All right.
I don't
Solid.
know.
You know that's going to be asked. It's going to be like the first thing asked.
Yeah.
And people who only watch 5 minutes, they're going to be that's going to be in there.
Yeah, maybe. I mean, this channel is called Two Stupid Guys Trade Stocks, so watch us lose all our money.
I know. It gets us out of everything.
Yeah, exactly. All right, guys. Let us know what you think down in the comments below.
All right. Have a good one, guys.